In this video, traders, we're going to look at how useful is the hot sectors tool in many of these charting platforms or many websites out there. Stay tuned. Hey guys, a very warm welcome to you. All right, so how useful is this hot sectors tool? You've got one on FinViz, you've got one on TradingView slightly. It has kind of top movers and top volume movers and gainers and losers, etc. But many other platforms and many other websites have this kind of visual representation of a hot sectors tool. So they might be like, well, that's useful, is it? How do I use it? So let's have a discuss it and see how good it is. Now, this is kind of the sort of thing you'd see. Now, fortunately, my trading is a heck of a lot better than my drawing, and you guys who have been around a while know that my little visualizations aren't going to win me any prizes, but you probably recognize these things from things like FinViz. So you tend to have either a pie chart and it says, oh, you know, banks are making up most of the move, or tech or retail or shipping. Unlikely, shipping, mining, or software. Or sometimes you get this kind of grid format where it gets a like really kind of dark green if it's a very extensive move, or it goes really bright red if it's very down move, it's a lot of down move, and then it goes lighter red if it's just slightly down. So it really adds some weighting. So it's what they call a heat map or a hot sectors tool. So you kind of can see visually, and it's normally segmented and says, oh, this is the gold miner section here, for example. This is the tech section. You know, this might be the transport section or what have you. So the point is you can see visually either one of these things, what is really driving the market. And so what do you do with that information? Well, there's a couple of things that you could do if you wanted to trade off it. One, it's just useful information. Go, okay, that's interesting. The other one is that you could trade a laggard or a leader. So you can pick out a sector. Let's say you pick out tech and you pick out and you say, right, and again, tech's broad. This can go narrow as you like, but let's say we keep it a broad thing. Tech's keeping pushing the market higher. And you go, right, well, I've got Apple on there. I've got Amazon on there. I've got, say, Shopify on there, whatever it may be. And you might get those three stocks, and there'd be obviously way more than that, but you might take the real laggard and go, you know what, that might catch up the market. Let's have a look at the chart and go, okay, well, the chart doesn't look like great, maybe not. What's the next one that actually has a really good chart that could be breaking out? So what you do is you go, right, okay, let me identify a strong sector. Okay, strong sector, and make the assumption that strong sector is going to continue throughout the day or potentially throughout the next couple of days. Then what you're looking for is a chart in that sector that's about to go through a key level. So maybe it's not one of the hottest stocks out there, not the main one, but something that if it starts to break out could really get some momentum. And then what you do is you find one of those in that sector by looking through all the constituents of that sector or that group of stocks, find one that's about to break out, and the assumption is that the strength of the sector will suck this out of the breakout, giving more potential to the breakout move. So you can buy this as it's starting to break out, thinking that the sector is going to pull and keep the breakout valid rather than having it fake out. So one thing you can do is kind of take things a little bit one step further and go, right, let me go through the charts, let me find the chart that's got the best pattern and use the weight of the tide, if you like. Imagine that's the tide. Use the weight of the tide to help this thing break out, knowing that I might get a volatility burst as well as the tide lifting it. So I've got more chance of the actual trade working. So that's one way of doing it. Another way that you can do it is you can look at the laggard and the leader, and you can pair trade the two. So you can say, right, that's leading, that's doing very well. This one's lagging and that's not doing very well. Okay, now this sometimes isn't the best because very often leaders will just go, and laggards are just generally, if they're bad, dead stocks, they're dead stocks. You've got to do a little bit of filtering in looking at the chart as well. I like to use the chart and see the price action. So if the price is okay and it's in an uptrend, but it's just lagging, then it's probably okay. If it's in a downtrend, it's lagging, well, it's probably just out, it's completely out. Even though it's in the same sector, it's probably got completely, it's a broken stock. So you find uptrending chart, let's say we've got an uptrending sector or a sector that's a hot sector and it's gone bright green on you. You find one that's slightly lagging but still a decent chart, find the strong one, and in fact you're better off taking out the third strongest or fourth strongest rather than the very strongest, and you end up shorting that one and you buy the laggard. So you have a pair trade looking for those two to come back together, so to speak. So rather than diverging away, converging together. So you're trading a differential of them. So you're buying the laggard, assuming that that is going to catch up with the rest of them. Like I say, you don't want to buy too much of a dog. And again, you don't want to sell too much of a superstar. You want that middle ground, if you like. So you're buying that laggard, assuming that's going to eventually catch up. And you're selling the kind of outperformer, not the superstar, the outperformer, assuming that might just flatline a bit and the other two catch up. And that gives you a neutral sector exposure, not quite fully, but neutralizes your sector exposure, so you're not exposed to this kind of whole thing ripping or dying on you. But you're picking out a couple of those from the heat map, from the hot sectors tool, and going, right, well, I think those are going to eventually come back, and that's how you're making your money. You're making your money from the laggard that you're long on catching up, the one that you're short on, or not the superstar, again, the outperformer, or you're short on, not doing so well and coming down. Now, not necessarily falling, doesn't matter if it falls or not, as long as the laggard outperforms. They can still carry on up, the hot sector can still carry on being hot, but if the laggard catches up twice as quick as the outperformer does, then yes, you're going to lose some money, but you're going to lose some money on the outperformer. Shorting that, you're going to make twice as much on the laggard, and that's how you make your money. So it's a pair trade opportunity there, and there's an opportunity to combine it with charts and technical analysis and price action to say, hey, if there's a big win behind this and I've got a nice chart set up, which is the best one I can take that might just give me an extra little boost if I take this and I hit it right. All right, guys, that is how useful is the hot sectors tool. Let me know how you use the hot sectors tool. You use it, how do you use it? You use it as a screening process, you use it for your trades, you use it just for information, or do you not look at it at all? Interested, as always, guys, to hear what you have to say about this one. All right, guys, see you next one. Take care and keep the risk managed. Bye-bye.